Do the indexes really paint a true picture of what's going on in the economy? Or do two of them tend to exaggerate their performance and could provide you a false sense of security? Then let's answer this question. I promise you we'd talk about why are they lying to you? And partly it has to do with both the S&P and the NASDAQ are weighted indices. 10 stocks on the NASDAQ contains 48%, almost 50% of the value. And so if these 10 companies are doing well, guess what? It'll appear as if the stock market is doing very well. The heavy weighting on a few stocks is really a challenging thing because they, one, lack diversification, which basically diversification allows for you to get past what shows up right here, concentrated risk. The majority of the risk on the NASDAQ is in these 10 stocks. Interesting, huh? It can also be misleading in that from an economic standpoint, it makes it look like, hey, the NASDAQ's hitting all-time highs and it's a great bragging point. But what about the other 90 stocks that are in the NASDAQ 100 that aren't doing so well? Nice questions to be asking, which takes us then to the next question is, here's the NASDAQ, and isn't it interesting in that the S&P, no, the S&P, Microsoft, oh, that's the same as it is for NASDAQ. Apple, oh, that's the same as it is for NASDAQ. Oh, NVDA. And down it goes, down to about here, and then it starts shifting out. Alphabet's in here, 2 Alphabet stocks, okay, and also over here. So in other words, Google or its or related thing, if you lump these two together, nope, they don't quite add up, but it would definitely rank them up here about there. So number 4 on the list, same thing over on this side here. And as you can see, Costco, all of these are great stocks. And if you're looking for stocks to build a portfolio on, makes a good place to look. However, to judge what's going on in the economy, is it a great place to look? And my vote is no. So we want to look at how can we find a better process or a better way to give us a feel for what's going on with the economy and also what's going on with the markets. Well, fortunately, there is something we can do to take a look at that. Let's take a look at the Qs first, representing the NASDAQ. It's getting all-time new high, right? So if I just knew about this slide, I would be sitting there going, okay, fine. And then what about the S&P? Same, all-time new high. However, there is an ETF that is out there that represents the non-weighted, and this is for the S&P, RSP, and look at the difference. Is this hitting a new high? No, it's not. So what this tells us is that not all the stocks in the S&P are basically participating in this great rally. And what about the NASDAQ? Well, QQQE is the same thing. Remember how the NASDAQ, as represented by the Qs, has already broken out and is up here. And I would venture to say, at least by just taking a look at it from an eyeball, it looks as if the NASDAQ may be telling us the lie in a little bit bigger way. At least that's one way to look at it. And look at what's going on in this entity here is we get a nice little bearish engulfing off of yesterday's candlestick. And so this may be ready to fall. But this gap here, okay, because you recall, the Qs were all the way up here. And so performance-wise, this isn't performing as well. If you've never taken a look at these, and the 2 tickers I'm looking at is QQQE, QQQE, and then for the S&P, it's RSP. Those are for the non-weighted entities. if you are struggling with finding a great system to trade, the AutoPilot trading system is for you. We've been operating for, the past 12, almost 13 years, and I have beat the S&P in the last 12 years. Was a really nice average return. I'll put a link down in the description, and I encourage you, come take a test drive. Come take a test drive, and I'll remind you, ask about the discount. You may qualify for a discount for the AutoPilot premium service. Have you ever wondered about how does the industry group that a stock is in, how do you think that works for determining whether a stock is a good stock or a bad stock? Have you ever asked yourself the question, why do certain people tend to trade the weaker stocks? It's crazy. I mean, I would think I would want to trade the absolute best stock that's available. As we get into answer this question, let's take a look at a couple of reasons why you always want to be trading the stronger stocks. And IBD suggests you always trade the top 20 to 25%, or at least the top 50%. So one of the big things, the reason why you want to be doing it is the top industry groups typically have the market leaders. And those are the ones that are going to help make you money. Lastly, it helps you avoid the risk. The weaker industry groups, the stocks that are in those, when the market goes into correction, they tend to overreact. And then they will basically blow to the downside much more rapidly. And you have to be really careful. Now, are there times when you would buy a non-leading industry group? Perhaps. I mean, I know some of you trade Tesla. Tesla's a great example of a stock that puts in really good technical patterns and this type of thing. However, its fundamentals right now on Tesla are really bad. Basically, I wouldn't invest in Tesla to the long side for long term, but they'd be more suited for the quick swings or even day trading. So it lowers your risk management. And some of the other situation on the people behind the trading the lesser quality stock is the strength of the industry group reflects the collective sentiment of the people who are trading it. So when an industry group is performing well, it indicates a large number of traders are confident about investing heavily in that particular group. The other thing that's really great about it is normally you can tell by the chart of the industry group, it is reflected in the chart of the individual stocks, and those provide really excellent bullish patterns in order to trade with. And so very interesting. If you've never looked at that before, that is what it's about. Hey, if you haven't yet, remember, hit the subscribe button and the bell to subscribe to the channel. Remember, all materials that we do provide are for trading purposes. Traders should always pay for trading a new method prior to the risk of their own personal capital, and past performance is not an indication or promise for future performance.